Hi, welcome to this video day. It's the 13th of May. It's Monday. We're just going to give our update out for the Japanese yen. We're going to be looking at it against the USD, the Euro, and the CAD. Now, we'll go to the charts in a moment. We did do a video on these three pairs around 10 days ago, and we just felt that the yen was getting ready to confirm a big move to the upside. Now, the yen has moved nicely higher, okay, but it's got far further to run on the upside in our view. This is just the start of the move. Now, in terms of the charts, we are going to go and take a look at them now, but please do keep in mind when I'm giving my view, it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques, our daily technical and sentiment analysis of 14 major forex pairs, you get live access to our member center on the link beneath this video. And also, if you wish, you can join our free mailing list. Okay, let's go and take a look at the trade setups. It's going to be USD JPY first. All right, on the USD JPY daily chart, and in terms of just before we draw some levels and look at the technicals, just want to go through the sentiment behind the chart. Now, in terms of, for new viewers, our favorite sentiment tool is COT Net Traders Positions, which is released each week by the CFTC. It's totally free. It's a fantastic tool. If you want to learn more about it, just search our video on our channel, COT Indicator. Now, in terms of, in brief, what we like to do with the COT Net Traders Positions is look at these two key groups, speculators and commercials. Commercials are smart money, okay? We want to see the two groups diverge against each other, and then if they diverge significantly, we will want to go with the commercials, okay? Now, we express it as a simple ratio here. Speculators 4.5 to 1 in terms of longs over shorts. They're pretty bullish, the USD. Commercials, smart money, 3.5 to 1 in terms of shorts over longs. They're pretty bearish, the USD. If you total the positions together, you get divergence of 8, which regular viewers will know is a decent divergence in this pair. Now, in terms of, notice in the previous video, this 112 level is a key hedging level. Commercials are hedgers, okay? And they sold into the level here, push the dollar down, dollar comes back up, speculators trying to battle and get through the 112 level, push away from it, they can't do it, and we come to the downside. Now, in terms of the COT Net Traders Positions this week, the two groups almost have an identical ratio to last week. So speculators aren't giving up the long side, okay, even though the price is falling. That just indicates to us more follow-through selling. Now, in terms of this trade, from our perspective, yeah, we've come off this 112 level, coming at 111.40. We're 109.18. So it's only 220 pips so far, but I've got a feeling we've got a lot more downside. Now, I forgot to mention where the downside is, and I've written it here. Did the weekly chart last week. I'm not doing it this week. I'm just going to give the weekly levels we're aiming for. You can check the previous video if you wish. 104.50, then 100. Big move to risk off with target 80. We just got to 100. That gives us 900 pips. And I feel there's really big downside potential in this pair. I'm actually, sorry, I've written the yen fundamentals here, which I better go through before I can draw my levels. The downside is just so good because all the bearish news is priced in to the yen in our view. And we just don't see significant downside. It's all basically upside for the yen longer term for us. And let's take these points. Point 1, stimulus in Japan is at its limit and a reduction is coming. The media always talk about, negative rates in Japan. The fact they print money means the yen must go down. Well, it's all in the price now. Okay, a reduction is coming. And you could see this when the yen didn't fall in risk on. Yes, the number one safe haven currency. You had stock markets at multi-year highs when we're up at this 112 level. But the USD couldn't push up on the yen. So basically, that was a warning that the yen would turn. Also, it's the most oversold major G7 currency. Risk off is heavily bullish for the JPY, and we've moved from risk on. We've got a little bit of risk off now. I think that's going to accelerate. So for us, I see, well, obviously I see a lot more downside potential. So how would you get into this trade if you wanted to? My own view is we've moved down quite nicely. So let me just draw a trajectory line in. This morning in the Member Centre, I put our stop behind 111, or it still remains behind 111. So basically, we had that little gap there and we came down. But I'm looking now to bring it down. Okay, this will be the stop for fresh positions as well. If you look at where we are, 109.18, I would just wait for 109 to give way. Okay, 110 is a round number. Okay, so that's going to provide resistance on the upside. Yeah, round numbers are very significant for us because there's a lot of order flow around the round numbers. So if you come through 109, the stop can go behind 110. I'd go 110.50. So let's say you come in at 108.80, just below the round number, just get clear of it. 108.80 is be 880 pips if we do get to the 100 level. And generally you have to risk it to 110.50 in my view. So I like the look of this trade. And yeah, far more downside in our view. Is this level here significant? You could see it as significant. For me, that double bottom so long ago is not. Just I think that level will get run. I'm going to stick with these weekly levels here now. I just don't see, yeah, that double bottom is significant. So yeah, plenty of downside potential in this one. Let's move to the next chart, which is going to be Euro JPY. All right, we're on the chart of Euro JPY daily, and in terms of this pair, we're in at 125.80. We came off the 126 level, break of this 20-day moving average. It's doing a little bit better than USD. JPY just over 300 pips so far, but a lot more to come in our view. You can see my weekly levels here. Not doing the chart in this video, we can check them. 115.50, then 112. Get to 112, that's over 1,000 pips. If we get to 100, which I think we are going to do longer term, that's going to be 2,200, but that's longer term, okay? Or if we get big move to risk off. But Euro for us, just out and out bearish. It's got limited upside and a lot of downside. And the fundamentals, I've listed them out very briefly here. Stimulus to be increased in Eurozone. They've already bought it back in a small way. Our view is they're going to be increasing it. On the other side, obviously, we think the Bank of Japan are at their limit. Okay, I don't think Eurozone is at all. I've discussed this more in my Euro USD videos, which you can go and check out. They're bringing back stimulus and cheap loans to banks and all that because the economy is on the verge of a recession. It's not far away. And in terms of the media, you'd think that Eurozone was booming. It is not. Okay, just got to look at the facts and point to a recession. We've got a really big slow up in growth. What else have we got? Trump is warning of tariffs on EU autos. His spokesman did that on Friday. That is heavily bearish for the euro. So for us, a long way to go on the downside, and we see the fundamentals as out and out bearish. Now, in terms of this pair, if you wanted to come in, where would you enter? Well, you've got a round number there, which is 124. Could get back to that level, test it, or maybe get a little bit above it, but just don't see any more strength than that, really. Draw trajectory. Draw trajectory in just there, just the slope of the trend. It's double trend line, which we like, and this 20-day moving average will come down if the price gravitates up. If we're, just for new viewers, if we're looking for a big bear trend, then we're looking for this 20-day moving average to provide resistance to rallies. So we're going to get two trend lines, 20-day moving average at 124 on a rally. That would be a sell in my view. In terms of entering the trade on weakness, where could you come in? I would come in straight through that double bottom. And I wouldn't, on this occasion, wait for a round number to give way. I'd come in at 122.40. Just think, if we break through this double bottom, then we'll be away to the downside. We rally back up here, you can sell it obviously. Where would your stop be? I'll put my stop just back here. A little bit of a gap there in those two tails. Two tails, a little bit of a gap down. I think 124.50 is a good area to put your stop. So this one, yeah, it's going well. We'll see, basically what she does. Now let's move on to our last pair, which is going to be, of course, CAD JPY. Right, last pair CAD JPY, and just before we draw some levels, let's have a look at the fundamentals which we think are bearish for the CAD. First one, it's a proxy risk currency. Very sensitive to risk on and risk off. In risk on, it couldn't push up through the 84 level. Like I think I said earlier, the stock market's multi-year highs just came down. In risk off, if it really accelerates, the CAD is going to get badly hurt in our view. Even if we don't go to big risk off, the facts are global growth is slowing, and that means commodity prices will fall, and obviously Canada, big exporter of commodities. I could have put a third point in, which is I believe Bank of Canada are going to cut interest rates, which is bearish for the CAD. Now, again, in terms of the weekly chart, targets I've put down here 77 and then 70. We're at 81 at the moment, so potentially a lot of downside. Okay, now in terms of our trading in this pair, we couldn't get through 84. We can come in through the 20-day moving average at 83.50. And then it's a nice move down to 81 to try and get back up through the 20-day moving average, but it's looking soft. We've got a nice red candle today. Now, if you wanted to get into this trade, how would you play it? 82, obviously a round number there, I think will provide resistance. I can draw trajectory in as well. So there's a trajectory. So you got really double trend line resistance there. So it's a sell back to 82. And then I think stop, a little bit of a gap there. You can see it. Two tails with the 20 behind. I just put the stop right behind the 20. So about 82.60 would be fine. And that would give a really decent risk to reward. I mean, all these pairs have got decent risk to reward, in my view. Obviously, if our view prevails, so to speak, or comes true. But just one point, if you're selling a rally back to a level, always make sure you've got some weakness off the level. Just don't sell into the level. Yeah, you could sell the rally, come in on a test of 82, some sort of failure off the level. I'd say 81.70. What if it doesn't rally back? Where would you sell? You're at 81.03. I would just be tempted to sell through the round number again. I'd go through 80.80 and then see if she runs. I'll keep it that simple. But no, it's with these sorts of when you're looking for big moves, joking aside, you do not need to make this complicated in terms of technicals. Okay, I know I say this quite a bit, but a lot of people overcomplicate the technicals. Well, the fundamentals and the sentiment behind the chart. You just focus on the big levels, okay? And that allows you to just keep it really simple. A lot of people say to me our analysis is too simple, but we give our levels, and we do get a lot of big moves. Okay, anyone can do it if they want to. I've said it frequently. Overcomplicating the chart or believing that they move to patterns. No, big fundamentals behind the chart, sentiment are important. Technicals are a reflection of those. Focus on the big levels, and you'll do just fine. So for me, this looks like a good short. It's already been pretty decent. A lot more downside to come. Same argument applies to the AUD and the NZD as well. You'll see similar chart formations in all three. So we'll see how these pairs progress. But thank you very much for watching me as per usual. Take care. Have a good day.